A possible TikTok ban is one step closer to becoming law. A bill forcing the divestiture of the social media app heads to the Senate after the House passed it this past weekend. The bill's advancement comes as China steps up its campaign against foreign social media services. To discuss the rising tensions between China and the U.S., we're joined by Brian McCarthy, Macron's chief strategist and managing principal. Brian, thanks so much for joining us today. In the event that the U.S. forces TikTok to divest, how do you think that will be received in China?
Well, it's already not being received very well by the Chinese. And I think if ultimately that push does come to shove, I would anticipate the Chinese government would pull the app rather than selling it. I don't think there's any way that they would sort of provide, tacit agreement with what the U.S. is arguing here. They will just deny that there's any, link between the Chinese Communist Party and the data that's being generated by this app. But this is a very long road ahead of us. The House attached the legislation to the foreign aid bill over the weekend, so the Senate was sort of trying to slow walk it, but it looks like they're going to be forced to vote on it this week, and it'll likely be signed into law by the end of the week. And then we're going to go to litigation. So TikTok has said clearly that they're going to fight this in court. They've already won a couple cases in Illinois and Montana. First Amendment versus national security, this will be a really big case, but will probably be pushed out into 2025.
But Brian, I guess help me think through something. If there is no actual relationship between ByteDance and the Chinese Communist Party, right, if that isn't true, then why would the Chinese not allow a divestiture and a sale?
Well, there is, but the fact that there is no connection is their story, and they're sticking to it come hell or high water. And I think while ByteDance is probably worth anywhere between $250 to $300 billion, there is a fair amount of capital at risk here. Now, the company wouldn't cease to exist if it gets booted from the U.S. market, but obviously that there's going to be tens of billions, if not triple-digit billions, lost. Much of it on the part of Chinese investors. But that's really small change compared to what China is fighting for, which is its unfettered access to our market. And this is just one of a number of fronts in what is an increasingly sort of heated debate about China's involvement in global marketplaces.
And Brian, outside of TikTok, Biden is looking to triple tariffs on Chinese steel and aluminum. What impact do you think that could have on U.S.-China relations?
That's sort of more noise than substance, frankly. Since Trump tariffed steel and aluminum, we're not really importing much at all directly from China. So raising those tariffs is really more a political message than anything substantial. Now, no one knows how much Chinese steel we're buying indirectly through Mexico and other places. They're not really talking about cracking down on that, which is probably, the crux of the problem. So we're just getting a lot of noise here into the election. And frankly, some of this stuff we've been debating for years, if not a decade or more. And in terms of, other than the Trump tariffs, there's really not been a lot of practical pushback against China's overcapacity and its domination of a number of industries. So the talk is really getting louder. It's becoming shouting as we head into the elections. But it's still not entirely clear to me that politicians in either the U.S. or Europe are really ready to stand up and do something about what is going to be an increasing flood of Chinese exports and, our imports, because the Chinese economy is flat on its back. It's really the only lever they have to maintain growth in their economy is to export. So this is an issue that's really going to heat up into the election. But again, in terms of substantive actions, there's still a lot more talk than action, frankly.
Brian, I'm interested with this election coming up. When it comes to the kind of approach to their general approach to China, Brian, what are the big differences at this point, in your opinion, between Biden and Trump? Because it does seem both at this point are pretty tough on China.
Again, they're both tough in terms of words. Now, substance, Trump was tough for a while. He raised a bunch of tariffs, but in the end, he caved, basically. So, 2019, we're heading into election, and Trump, made an agreement to take the pressure off China, to sort of at least temporarily give up on forcing China to make fundamental structural changes to their economic system in exchange for basically China buying a bunch of soybeans and other stuff. Subsequently, China didn't buy those soybeans and other stuff, and the Biden administration never really followed up. So, Trump talks a big game, but whether he's really up to that task, I don't know, because the bottom line, crux of the problem is actually taking steps to decouple from China is insanely expensive at this point. And whether we can actually take substantive steps to decouple without causing a recession in the West is unclear. So these are very, very difficult choices that our system has struggled to make, frankly. So again, the talk will reach a crescendo in coming months. We're hearing it from Europe. Europe is talking about tariffing Chinese EVs, which are pouring into Europe. But on the other hand, the Chancellor of Germany was in China last week saying nice things. So, there are constituencies on both sides of this issue. Again, to me, it's an open question whether either the U.S. or Europe will take substantive steps to crack down on these imports.